Hi, welcome to this Sphere. David, it's on the 19th of May. It's Sunday. This is our weekly Forex forecast for the week ahead. Now, in terms of good risk-reward trading opportunities, there's quite a few to look at. We'll go and take a look at the charts in a moment. But just before we do, in general terms, Forex markets over the last few weeks have been really good to trade. We've seen some really nice trends. Volatility has picked up, particularly in the more minor pairs and the crosses. The majors still lacking a little bit of volatility. But I think we're going to see a move up in volatility in them as well as we move forward. Now, in terms of just generally the way we've been trading the markets, I'm sure regular viewers will be familiar with this concept, but just for new viewers, we're heavily into trading big money flows from risk currencies to safe currencies. And any opportunity that has presented itself to buy a safe currency over a risk currency with the right technical setup, we've taken it, and that's given us some great profits, and that theme is going to continue going forward. It's a great concept to keep in mind, in my view. I'll explain why you should when we're looking at the charts, and we're going to go actually and take a look at the charts right now. But please do keep in mind when I'm giving my view of the charts, it's my view as of this moment in time. Can of course change in line with the market action. If you want all our trading techniques, our daily technical sentiment analysis of 14 major Forex pairs, you can click on the link beneath this video and you'll get live access to our member center. Now I'm just doing some weekend analysis, so I'm going to use the charts from our member center. So let's go and take a look at some trade setups. In our member center, just going to look at some trade setups, obviously. But first, before we do so, just for new viewers, I'm going to explain how we do our analysis. If you're already familiar with how we do it, just skip forward 3 minutes. Now, we're only going to work off daily support and resistance levels. We're not going to drop down to lower time frames. That's just for us trading noise. We're after bigger moves. We want normally a minimum of 200 pips per trade. If we can get bigger moves, 500 pips or more, we'll go for that sort of profit objective as well. And we've got quite a few really good open profits at the moment when we get to the charts. We're not going to sit around looking at price action during the day. We're only going to do it twice, once in the morning UK time, and then we'll come back in the evening and see if we need to make any changes. So it's kind of set and forget trading. We don't do any market orders. Now, in terms of our charts, when you see them, they're extremely minimalistic. We hardly use any trend lines. We don't want them, okay? We only want significant levels of support and resistance. There's going to be big order flow around those levels. And to find them, we'll look at the weekly charts, see if they back up the daily chart levels. If they do, that makes them more valid for us. We'll also look at sentiment. Our favorite tool is the COT, the CFTC Net Traders Positions. It's a fantastic tool because it tells you where big money is sitting in the market, actual positions, which will help you detect trend reversals in advance, which you can't see from the technicals, and also postulate how far a trend might run. You can't say a trend is going to run 500 pips by just looking at technicals. You need to know the buying and selling power behind the chart, and that's what the COT gives you. It's a free tool. If you're unfamiliar with it, there is a video on our channel called COT Net Traders Indicator, which you can check out for more details. But in general terms, what we're looking for, two groups on the report: speculators and commercials. Commercials are the smart money. When the commercials diverge significantly away from speculators in terms of their positions, we'll want to go with the commercials. Okay, I'll make reference to the report and trade setups as we go through the video. We'll also do our own sentiment analysis as well. Now, in terms of the majors, I'm going to start with them, and they haven't given us our best opportunities. We've got them more in the crosses and the minors, but I think the majors could get a bit more interesting. Let me just get the first chart, which is Euro USD. Make it a bit bigger so you can see it. Sorry, let me just get the chart there. Now, in terms of Euro USD, just extremely bearish. I've done plenty of individual videos on this pair. There hasn't been a lot of volatility in it. We're in at 113.80 and we're at 111.56. There's only 220 pips, but all the risks are to the downside in this pair. We think it's going to break into a big downtrend shortly, even if it doesn't. Okay, upside is limited, and there's an attractive carry interest if you're holding euro shorts. Now, in terms of the USD generally, we're bullish on most other majors, and the reason for this is, yeah, the USD, really good interest rate earnings on it. The economy is doing better than most other major economies, and it also acts as a safe haven currency if we move to risk off. We're in risk on at the moment. The USD has done relatively well. Move to risk off, it's going to soar. Now, in terms of Eurozone, just nothing good going on at all. They've got negative rates. That's going to prevent big rallies. But the economy is in a total mess. It's near recession. There's a banking crisis, political problems. The ECB with negative rates can't help the economy. So I think it's only a matter of time before we break down. And just in general terms on the chart, you can see these rallies here. They're rejected. The last two rallies, this one here, rejected, and this one here is being rejected. They're shallower rallies than the ones we've seen before. That indicates to me that we could have a big breakdown. We take out this tail here, which is just above 111. We get below 111, which is the round number, then we'll be off to the downside. I think this now will act as decent resistance. I'm going to bring the stop down if we start to move down to this level. I've got it quite wide at the moment, 113.40, so back here. So I'll bring it in behind this level. I just feel, rallies are just selling opportunities. The euro is a sell on all the safe currencies, and far lower prices, but it's a bit of a patience game at the moment. Moving to the next pair, GBP USD. I did a video on this yesterday, and I did GBP against the CHF and GBP against the AUD, but the pound is oversold everywhere. And look at these red candles come down here. When you get a big sell-off like this, it's on higher volatility. You can see the Bollinger Band's widening out. We've got outside of the outer Bollinger Band. You don't normally stay outside for very long. So I see the pound as just simply a buyback through the round number, 128.20. Stop behind the next round number here and see if she runs, okay? I do like the look of this setup, but I do prefer the GBP long in the crosses. And this sell-off here, the sentiment is all about basically the UK is going to leave the EU without a deal. The odds of that are extremely low. Bad news in the price. Pound is going to bounce, okay? Now, moving to the next pair, AUD USD. So let's line that one up. There we go. Just out and out bearish of this pair in terms of, AUD is a proxy risk currency, okay? We've had risk on. You can see it's gone down. Get risk off, the US dollar is going to soar. There's nothing good going on in Australia. This is a big trend that is just developing, in my view. You've got get interest rate cuts in Australia. The economy isn't doing well. Debt levels are high. And it's exposed to China, which is slowing up quickly. Now, from our perspective, come down. Could get to the trajectory, maybe 69.70. That's about it as far as we're concerned. We'll normally, when we're placing our stops, be back behind the second level, which we are here, behind the 70 level, which is a key round number, and also this 20-day moving average. If we've got a big trend, or we think a big trend is in motion, we're normally looking for rallies to fade back to the 20-day moving average. So back behind second level resistance. Got a target of 63. I think this trend is just getting in motion. USD JPY. In terms of this pair, it's the only pair longer term where we're bearish of the USD. Okay, in the short term we're bullish of the GBP on the USD, but longer term we're bearish of the GBP. USD going down on the yen in our view. And I haven't got much out of this one yet. We've got much more in the crosses in terms of profit, which we'll come to in a moment. We're in at 111.40. You can see we're at 110. So it's only 140 pips. We're testing this first level of resistance, looking for it to hold. If we can break down below the low, then I think we're going to 104.50, then 100. Sorry, I put the decimal point in the wrong place. It should be, of course, there. Stop I'm going to use the 20-day moving average. The yen is the most oversold major currency. The market has been bearish on it due to stimulus, printing of money, and negative rates in Japan. But stimulus is now going to peak. They're going to bring stimulus down. That's bullish for the yen. And yeah, it's the number one safe currency. So if we do get risk off, the yen is going to soar. It's going to do even better than the dollar. So pretty bearish of USD JPY, but this trade hasn't yet come to fruition. I want to see this level hold, or some reversal from the 20, and then hopefully it'll be on the way south. Last pair, USD CAD. USD CAD, this is a good illustration of why it's been hard just to trade with technicals, because look at this price action, just so choppy, isn't it? However, in terms of the fundamentals and sentiment behind the chart, points to USD strength. Canadian dollar, proxy risk currency. It's going to basically go down if we have risk off. Commodity prices are going down. We think crude oil's going down. That's going to weigh on the CAD and push the USD up. We've kind of failed to break higher on Friday, but we're finding support at the 20-day moving average. This level here is key, 134. Tail poke there, got through and then came back there. So a bit of a patience game with this one, but a nice big blue to the upside. Should take this level out and then go on to 138. Now, we'll look at more USD pairs, and like I said, I think I said in the intro, I've done a lot better in the more minor, lesser looked at pairs. But first, before we do that, just want to look at some crosses that interest me. I just need to make my menu a bit smaller, sorry. Let's get back, where are we, crosses? Now make the chart a bit bigger. This is a cross I really like. It's Euro JPY. Euro's come down quite nicely. She's hovering around over the last 3 days. However, this pair is going down a long way. Okay, at the moment, in at 125.80, 122.78. So what's that? Is that 300 pips? Yeah, basically 300 pips on this one, but far more to come. And you can see again what we're doing, because the fundamentals clearly favour the yen in our view here. One level of resistance there, which is a double trend line, a trajectory and a straight. Then the stop is back behind the round number, the 20-day moving average. Just a long way to go on the downside. I think this is a great long-term position trade. In terms of the GBP, I'm liking the look of it against the euro as a potential sell. We've come up nice and strong here. I'm just trailing up my entry just behind the low. If we go higher, I'll just keep trailing it up. But in terms of the pound, it's oversold. Okay, and it's all about Brexit at the moment. That's the only reason the euro's going up. If we looked at the two respective economies, which is doing better, UK economy is doing far better than Eurozone. Interest rates will be coming. They're to come already if it wasn't for Brexit. So I got the feeling this is going to break down hard and then go down to weekly support. One to watch. Sorry, I didn't realise I'd skewed that line so much down the bottom. It should be straight. But yeah, that's a decent looking risk to reward trade in my view. And another pair I really, really like, it's just really getting in motion, is the AUD against the CAD. And come down quite nicely, but far further to run. And I've made a note here, the CAD is the strongest of the commodity currencies. It is. Why? Because it's exposed to the US economy. The other two, New Zealand dollar, Australian dollar, are exposed to China. Which country would you rather be exposed to? The US is doing far better. So this one is now starting to get into motion, and a lot further to run on the downside in my view. In at 95.40 and we're at 92.75, so not too much profit. I mean, just over a few hundred pips, but any rally, a sell. if we get back up to this double trend line here, about 93.70, I think that level will hold, and we've got our stop behind the second level resistance, which is a round number, and the mid-Bollinger Band, okay, or 20-day moving average. Far further to run on the downside. Now let's look at some USD pairs. I need to get my menu back. Some more USD and yen pairs. So where can I find those? I need to go here. Sorry, just make my charts a bit bigger. First pair I really do like is this one. I'm saying it for a while, just in terms of a small position. USD is just going so much higher on the Chinese yuan, and the move has already started. And we've got a nice entry, 671.60. We had to be patient and wait, but we always thought the trade negotiations between the US and China were not going to be agreed quickly. So the risks were the dollar would jump up, and she gapped higher, and she's gone nicely higher. And I made a point actually on my notes here. The People's Bank of China are no longer holding the USD down. They were holding the USD down, but now they're not going to bother. Why? Because if they let the USD go up, that mitigates the impact of tariffs. Would you want to come in at this level? You have to see, really, but I think if we break higher, I'd be in, if I wasn't already. Stop behind the 690 level. It could go to 7, even 10. Yes, it's a long way on the upside. Okay, just a small trade. And the more minor pairs very often give you the better opportunities. Okay, tend to be pretty volatile, and one that's extremely volatile is this one here. It's USD Turkish lira, and USD's had a massive move up, nice correction. We've come back in. Now we bounced off this 20-day moving average. Okay, in terms of Turkey, this is a currency that could really melt. The USD could really soar because they've run out of money to protect their currency. Okay, which they want to do. They can't. Just the Turkish lira out and out bearish. This could end up like the Argentinian peso, in my view. Way higher prices coming. This is a pair I'm extremely interested in. Have been for a while. It's USD MXN. It's a really good COT net traders kind of setup with speculators heavily short the USD, commercials, smart money heavily long. We have come up, but it's been nice and choppy. Okay, well, not nice and choppy. I prefer it wasn't. One big blue, and we'll go to 2050. There's so many speculators short in the market, and the MXN is a risk currency. USD obviously a safe currency as well. USD's already worked its way up a bit, looking for way higher prices in this pair. What have we got next? This is an interesting pair. It's the Hungarian forint, and any currency that is correlated with the euro. Sorry, let me just line my chart up. Any currency that's correlated with the euro, if you believe the euro is going down, then the correlated or proxy currencies are going to go down quicker. And we've had a lot of luck in this one. The last forecast, saying basically long from back here. And we stopped ourselves out, came back in, but generally just trying to stay long of this one. Okay, it's broken out to new daily highs, going up to 3. And these proxy currencies as well, they're kind of risk currencies too. So your euro bearish, look at the proxies. There's other proxies to look at, which we'll come to in a moment. What have we got next? NZD USD. Same view of this one really as AUD USD. Just going a long way to the downside. I know we've had a decent move down already. We're in at 68.80. We're at 65.27. So it's at 350 odd pips. But more to come. Yeah, you can see my levels. 60, then 50. And again, the way we play this one is just basically first level resistance should hold. Stop back behind second level resistance. NZD similar backdrop to it as the AUD. A lot further to go on the downside. USD SEK, another Euro proxy. We've been bearish of this one for a while. USD, good interest rate earnings against a currency that's got negative interest rates. If you wanted to come in long and just buy the breakout trail stop behind the 20-day moving average. Sweden's got terrible problems in terms of its economy. Like I said, negative interest rates as well. Now let's have a look at some yen pairs. And in the crosses, just doing really well in terms of the yen longs. This is a really nice downtrend. It's got far further to run. I mean, so far out of this one, not bad. 79.80 in, we're at 75.43, so 440 pips. She's a sell back to this level here, which is just below the 77 level, or on a break lower. Trading our stop behind the 20-day moving average. I haven't drawn a resistance line in there, but you can see where it's going to be. It's going to be in this gap or just below the gap. All the commodity currencies going far lower. The fundamentals clearly favour the yen. Next one is CAD JPY. Not so much out of this one so far, just a couple of hundred pips really. But this one is getting ready to go down. First level resistance at 82, I think should hold. Come off that level a bit on Friday. Stop back behind the 20-day moving average and the second level resistance just below the gap. All the commodity currencies are going down, which is the best. I've yet to look at what's it called, NZD JPY. I think in terms of the three commodity currencies, I can't decide. So basically what I'd do is treat it as one trade and do all three. I won't get the best and I won't get the worst. But yeah, they're all going down longer term in our view. What have we got next? GBP AUD. I actually did a video, I don't know if I mentioned it earlier, I think I did, that covered that pair and another pair, GBP CHF, in a video yesterday, which you can check out. If I didn't say it earlier, you can check out the video. Just going to go and look at some final pairs. Let's have a look. Where are we? Here's another pair where the USD is bullish. And this is where you just use the interest rate earnings on the USD, because the interest rate earnings in the Singapore dollar just aren't there, are they? USD starting to push hard. It's going far higher. Also, Singapore, you can see my notes here. It was a problem, obviously, because of the slow up in China and Asia, which is going to weigh on the SGD. So another decent position trade. USD Czech krona, USD Polish zloty. Covered this in a video. It doesn't look that interesting on the daily chart, but if you look at it on the weekly chart, if I can get it to come up. Sorry, it's going to spin around for a second. Here we go. This is the USD Huff we looked at earlier on. You can see she's breaking up on the weekly chart, going up to 3. USD PLN, I just like the look at this one. Have a look at it. Kind of holding around the 20-week moving average. You can see a nice blue coming up. And we are going to go up to 420 in my view. The risk reward on this pair is really, really good. It's the same setup in the Czech krona, which I just flicked past, I think, didn't I? Yeah, so it's similar sort of setup in the Czech krona. Breakout to new daily highs. Both those are going way higher. Two of my favourite long USD positions at the moment. USD rub. This is a COT trade. And we did get stopped out for a minor profit. It's got a massive speculative short position. I'm sorry, I made my charts bigger, have I? Sorry. It's got a massive, speculative short position in it. It did break up for us. We stopped ourselves out, minor profit, but just holding support. If we come back through this double trend line, I'm looking for the specs to get taken out on stop. Also looking for crude oil to come down, which is bearish for the rub, and I'm also looking for risk off. It's another miner which I really like the look of. USD ZAR. USD is going higher on all the emerging market currencies or exotics. This correction here is a buy, and yeah, just basically come through this double top here. Long way to go on the upside, 15, then 15.50. What have we got next? NZD, CHF. I like the look of this pair, actually. I think we're going down to 60. It hasn't been that volatile, though, and not much profit out of it, but it's a sell back to this level here, which is 66.70, or you can just take it on a break of this support level. Going to 60, you don't have to have too wide a stop either, in my view. I've got mine at 67.10, just behind that 20-day moving average. Last two pairs, NZD JPY, the last of the commodity currencies on the yen, 75.30 in, 71.56. So it's a really good profit, well over 400 pips, but a lot more to come. I've got 68, but I'm actually going to extend that down to probably 60 as a target. Again, first level of resistance is here. Stop behind the second level of resistance in the 20-day moving average. Last one, NZD CAD, a bit similar to AUD CAD. I had to wait on this one. I got stopped out of it when it went up there, but caught it on the turn, and we've held it ever since. So at 91.80, and now we're at 88. So yeah, really good profit, 380 odd pips, and still going far lower in our view. 20-day moving average there, that level, 89, round number, should act as resistance. Stop back behind the second level. So they're some of the pairs that I really like for the week ahead. I'm just an out-and-out USD bull. Okay, certainly on the commodity currencies, the emerging markets. Yen bullish, obviously, particularly on the commodity currencies. Really like it on the euro as well. And in terms of pound, I'm still looking for a bounce in the pound. But I think, yeah, in terms of the markets, you can see there have been some decent trends over the last few weeks. The volatility still is not that high, though. Okay, we want it higher, of course, and I think it is going to increase. But we just like being safe currencies over risk currencies. That's nearly every position that we've got, because the safe currencies are holding their own in risk on. If we move to risk off, they will soar. And in terms of for new viewers, obviously my charting is extremely simple, but it can be kept very simple just because we've measured sentiment, the big fundamentals behind the chart. That's what drives the chart. It doesn't, I've said this on numerous occasions, come out of nowhere. So you can use very, very simple technicals. And it can work really nicely. As you can see, some decent trades on the board, hoping we have a good week ahead. That is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.